Let's assume that you're a new or even an existing business owner. You have your business entity set up through the state. You have already acquired your business EIN through the IRS website. You are on your way, right? Now it's time to head to the bank and open some business bank accounts. But how many do you need? How many checking accounts? How many savings accounts? And what about credit cards? Most business owners already know they need to keep their business and personal transactions separate. And tracking their business transactions can help prepare their tax returns and reduce their tax bill. But how many bank accounts do you need exactly in order to run a smooth business operation? How many bank accounts do you need now in order to avoid stress and frustration later? Well, this video will answer all of these questions and much, much more. I'm Crystal A, CPA, and I'm going to help you understand how many business bank accounts you need as a new or established business owner. Because the bank won't tell you, or they might try and sell you on accounts you don't even need, but not today. So just make sure you watch this video until the very end, and let's get started. Okay, the very first bank account you need to have as a business owner is an operational checking account. This account is probably the most obvious one to have. It is the one where your sales revenue gets deposited into and your normal day-to-day expenses are paid from. Expenses like your office rent, software, internet, supplies, and subscription costs. These are the costs that you normally expect and incur for the operation of your business and therefore are ran through your operational account. The next bank account you need for your business is your business savings account. Just like you have a savings account for your personal life to fund things like family emergencies or sudden home or car repairs, your business also needs a savings account for emergencies. To start, try saving at least 6 months worth of operating expenses and ultimately get that number up to 9 to 12 months of operating expenses. If you do this, you buy yourself time in case of an emergency, and it allows you to stay in business longer while you figure out your new strategies to keep your business up and running. Look, we've all experienced 2020, and so many businesses closed down or just suffered financially from the uncertainty of the pandemic. But what is certain is that no one can control what happens to the economy, and more downturns can be expected at some point in the future. And with that being said, protect your business and peace of mind with a business savings account. The next bank account you should have as a business owner is a tax account. This is an account that is separate from your business savings account and operational account, and it is used to pay your tax liabilities as they come up. As a business owner, you are now 100% responsible for keeping track and paying your taxes on the income you earn. Taxes are not automatically withheld from your sales revenue and submitted every 2 weeks as with a W-2 employee. But you are required to pay estimated quarterly taxes based on your income. Now, unfortunately, most business owners don't budget any money for their taxes and get hit with a large, unexpected tax bill without having any funds readily available to pay them. And I don't want that to be you. Now, if you're wondering how much to set aside for your taxes, a good rule of thumb is 20 to 30% of your income. So revenue minus expenses equals a number, 20% of that number. If you want to be more accurate, you can use Form 1040-ES to help calculate the exact taxes you'll owe for the quarter. By the way, I created a 5-hour course to walk you through things like this and the most powerful ways to reduce your tax bill. If you want access to that course, private trainings, and live Q&As with me, just go to mycpacoach.com to learn more. Another option the IRS allows is for you to pay 10% more of the taxes you owed last year into 4 quarterly payments. For example, if your total tax bill last year was, say, $10,000, 10% more of that would equal $11,000. Then you would divide that $11,000 by 4 and submit those payments at the end of every quarter. Bottom line is, I have seen this mistake over and over and over again. Please do me, your CPA, a favor and yourself a favor and have a separate account for your taxes and set aside some money every month for it, okay? Good. The next account I recommend is a capital investment account. And the purpose of this account is to set aside money to reinvest and grow your business. As a business owner, it's important to always be thinking of ways to grow and better your business. Whether that means opening a new location, expanding your product lines, investing in a business vehicle, or investing in marketing beyond your routine advertising. You're not going to grow your business from 0 to $1 or $10 million by doing the same exact thing every single month. You have to think bigger and invest in your business. Keep in mind, these costs are not operational expenses. They are not tax expenses, and they are certainly not an emergency expense, but they are costs associated with the tactical and strategic vision for your company, which is necessary to get to the next level. Now, depending on how fast you want to grow your business will determine how much you should set aside every month for capital investments. For example, for the first 14 years of its business, Amazon reinvested 100% of its profits back into the business. They had a goal of being the biggest company ever, and we see where they are today. They reinvested in their business model, products, and in the promotion of their products. Obviously, you don't have to take it to this extreme. I'm only telling you this to emphasize the importance of having funds set aside for capital investments in your business. To start, put aside 10 to 15% of your business profit in your capital investment account and dip into this account when business investment opportunities come up that can result in increased revenues for your business. Lastly, as a bonus tip, if you can open a business line of credit, do so. The two main benefits of doing this is first, cash back. You can basically buy your normal business expenses on your line of credit and receive cash back for those expenses. You're essentially getting free money for the purchases you would have anyway. Secondly, having a business line of credit helps you to build business credit. Now, I can go deeper into the benefits and strategic ways of using your business line of credit. Just let me know in the comments. But having business credit allows you to borrow more money at lower interest rates to fund bigger projects in your business. As a business owner, it is so important to start off on the right foot financially to avoid the headache later on. Believe it or not, most people don't really have issues making money in their business, but managing the money in their business is a different story, and that's the skill you need to grow your business efficiently. Thank you so much for watching this video, and I'll see you in another one.